To some of your tweets. Now, let's dissect this session, starting with you, Julia Lee. Again, the Reds, the Bears dominating.
It was a day where it was risk off. We saw a sell down in the euro, a sell down in the Australian market, and we did see the Aussie dollar weakening off. So that seemed to be how traders were positioning themselves. It does look like the Australian market today moving lockstep in barrel with the euro. We have a look at the ASX 200 against the euro. This is the intraday graph, and I've just got the euro in blue, and you can see that they've just moved together. So the Australian market really taking its lead from the euro against the US dollar, and in that euro US dollar pair, I guess what dominated were rumours that Greece could call a snap election. Now, we've already seen what's happened to recent elections in the Eurozone, where a lot of citizens are against the austerity measures. We saw that in Finland, we also saw that in Spain, and I guess there's fears that we could see the same in Greece. So once again, those Eurozone fears looking like they've dominated the market. Not only that, we've seen that Wall Street Journal article saying that the US State Attorney General has approached 5 of the largest banks in the US and saying that if they didn't settle the fraud closure, that there could be civil liabilities of up to $17 billion. So that's on a state level. Those banks are regarded as having broken both state as well as federal law, so there would be federal implications as well. But this is not anything new. Back in February, we were talking about possible liabilities of up to $20 billion. Obama was seen to be pressuring the state attorney's office to pressure those 5 big banks. If we have a look at those 5 big banks, Bank of America, JP Morgan, Wells Fargo, Ally Financial and Citigroup, these banks account for 3 out of 5 home loans in the US. So it does look like in the US tonight, all eyes will be fixated on that banking.
Broadly for the market, in terms of where does the risk lie, it would appear if we're not even seeing a transfer into the defensive stocks, if they're even getting sold down, that doesn't seem to offer much hope.
We are seeing defensives outperforming the rest of the market, although we are seeing all sectors in negative territory with the exception of consumer discretionary. And I guess some value bargain hunters are starting to bottom fish or try and look for bargains in this type of market. We saw the retail sector having a strong bounce back, and if we have a look, David Jones bouncing off a key technical level. We saw Myers hitting an all-time low yesterday, but we saw it bouncing back more than 3.5%. But those banks certainly are firmly in focus, and as long as those problems continue to take centre stage in Europe, the banks are going to be what the market's watching, as well as the euro against the US currency. And if we have a look at the banks, we did see Goldman Sachs coming out to downgrade CBA today, but that stock was only down by 0.8%. Also downgraded ANZ, but it was only down by 0.5%. And really with the big 4 banks, the stock that I'm watching for the greatest losses in the next week is NAB. And that's because if you have a look at the other 3 banks, they've already broken down below the 50-day and the 100-day moving average. But NAB's a little bit of an anomaly. It has a bit of catch-up to do. It's been holding up fairly well. It's only just broken that 50-day moving average, so it does look like it has some catch-up to do in terms of loss.
More broadly in the financial stocks, Macquarie Group had a day to forget. At one point, their shares were down close to about 4% or so, closing down about 2.75%. What's the concern there?
Look, if we have a look at Macquarie, it's probably a barometer of markets and how they trade. And if we have a look at markets all around the globe at the moment, we are seeing correction territory. So those investment banks looking like they're coming under a fair bit of pressure, but it doesn't look like it's over yet. So we did see Macquarie falling to a 2-year low today. If you have a look at Macquarie, I guess there are concerns because of the headcount that it has in its business, 15,000 around the world. So if we do start to see a downturn, well, it takes time and redundancy costs to be able to get some of that headcount down. So I guess it is exposed to the slowdown that we are seeing in markets. We have a look at the US markets. The futures absolutely having a terrible day, and we rarely see a slide like this in the US futures through the Australian session, but they've been down 0.7%. And if we have a look at the US market, really looking at some key technical levels, we're looking for 1,295 to hold today. But if we have a look at the S&P 500 and the Dow Jones Industrial Average, they had been holding above the 100-day moving average, but unfortunately those futures breaking below some key technical levels, and really the slide accelerating once we saw a breakthrough of those levels. So it does look like it's going to be an interesting session in the US tonight. Certainly the futures indicating more pain for that US market.
Greg, agree.